Mr. Sunil.
Yes, sir.
So we have the next speaker, next week's speaker, Mr. Nanda Fernando. He is the CEO of Sampath Bank in Sri Lanka.
Okay.
And the week after that, we have Dr. Rashid Bajwa. He's the CEO of a very large microfinance related program in Pakistan called National Rural Support Program.
Okay.
So they are among the panel. And we are also very pleased to have today on the panel Dr. Naveed Anwar, who is the Vice President of Knowledge Transfer here at AIT. Very good afternoon, Naveed.
Yes, hi Venkatesh, hi, good afternoon, and good afternoon, Mr. Sunil KC and other panelists. It's great
Good afternoon. Good afternoon. How are you?
Great to be good, very good. Great to be connected to everyone.
Okay, so we start the webinar.
Yes.
Thank you very much. Good afternoon, everyone. Welcome to our webinar. This is part of a CEO talk series hosted by Professional Master in Banking and Finance, PMBF, at the Asian Institute of Technology, Thailand. Let's start with a few house rules. All attendees' audio and video are muted. If you encounter any technical problems, please send message to chat box and our staff will answer. If you have any question for the speaker, please wait until the Q&A session. After the talk, please type your question in the Q&A box. So first of all, we would like to introduce, give the introduction about the NMB Bank. NMB Bank is licensed as an A-class financial institution by Nepal Central Bank in 2008, is a member of Global Alliance for Banking on Values. And it has joint venture with FMO, is a Netherlands-based financial institution. And NMB Bank is a market leader in sustainable banking. The bank was awarded as Bank of the Year in 2017 and Bank of the Year in 2017 by The Banker and Financial Times in London. And now we would like to show you a 1-minute video of NMB Corporate TVC, which highlights those areas that the bank are promoting for sustainable banking.
सोच नया बदलना देशलाई ल्याऊ लहर बदल्न आफैलाई सबै मिली लैजाऊ देशलाई नयाँ युगमा भविष्य देशको छ नेपाली कारमा एक योजना बनाऊ पसीना मेहनत बगाई नेपाल समृद्ध तुल्याऊ जिम्मेवारी तपाईको तपाईकै अभिभारा आत्मनिर्भर नेपाल अब देख्नेछ दुनिया सारा
आत्मनिर्भर नेपाल का लागि समर्पित NMB Bank Move Beyond.
So now I would like to introduce Dr. Sundar Venkatesh, who is the Program Director of the Professional Master in Banking and Finance, to give the introduction about the program.
Thank you very much, Dr. Phuong. The Professional Masters is an AIT innovation. So nearly a decade back, AIT recognized that there was a need for a special type of program for working professionals. And this one-year program, which we started, has found a lot of acceptance among industry professionals who want to continue to learn while working. Since the foundation of the concept of the Professional Masters, we have started Professional Masters in several areas. including structural engineering, which is actually headed by Dr. Naveed Anwar, who is here with us today, and project management. The professional masters in banking and finance is in its 10th year, and we are very pleased to have graduates from over 7 countries during this period. Next slide, please. So the PMBF offers a very innovative curriculum, and it is taught by a mix of practitioners and academics. And this is what the professionals have typically appreciated. In this year, partly as a result of the pandemic, we are modifying the format of delivery. So it will be in a completely work while you learn more to attract participants from different countries across the region using a blended hybrid and in-class approaches. So we are looking forward to this exciting transition for the next batch, which is due to start in January 2021. And the admission process will commence by early October 2020. So with those few words, it's my pleasure to welcome today Mr. Sunil KC, who is the CEO of NMB Bank. He has a long and distinguished career as a banker, starting with international banks such as ANZ and Standard Chartered. His career in NMB Bank started in 2010, and he has been the CEO since 2017. NMB has also been a very strong partner of AIT, and AIT has had the privilege to support NMB's human resource development over the last few years. We would like to thank Mr. Sunil for taking time off from his busy schedule to join us here today. And the list of panelists today includes upcoming CEO speakers in this series, Mr. Nanda Fernando, who is on next week, and Dr. Rashid Bajwa from Pakistan, who is going to be addressing us the week after. We are also extremely pleased and honored to have Dr. Naveed Anwar with us today. He is the Vice President of Knowledge Transfer here at AIT. And among his various responsibilities is also enterprise engagement in finding new and innovative ways of linking AIT to different enterprises in the region. So may I now invite Dr. Naveed Anwar to deliver a welcome address to the participants.
Thank you so much, Dr. Venkatesh, and let me welcome again our esteemed speaker, Mr. Sunil KC, on behalf of AIT, and also our panelists who are joining us today and the future speakers. So I think this is a very exciting opportunity, not only for AIT, but also for the enterprises and other professionals in the region to start interacting in a way that previously was not so easy, and now this unfortunate situation has given opportunity for rethinking of the entire higher education, and there's a lot of debate which is going on in almost every forum, how we will be looking ahead in the future on delivering education and how the education will be closely linked to what the industry needs. And I think this right now, this close integration between the traditional education that we have at AIT and like Dr. Venkatesh mentioned, the professional programs that we have been developing actually already reflects a shift towards continuity of the education from the institutions to the profession. And I think the things changing as they are right now, it seems that this integration will become even more fluid and more stronger. At AIT, not only we have the regular academic programs and the professional master program, but now we also have another type of programs being developed and starting to offer, which are called flexible master's program. which are somewhere in between the professional programs and the traditional academic programs. So I think the opportunities of interaction between the enterprises, between the academic institutions, between the professionals and academicians has never been greater at this time. And this today, this talk is a testament to that development. And I have the opportunity to attend several such webinars, but today the number of participants is really quite large in my opinion. We already crossed 100 participants who are attending now, and a lot of people also attending through other mediums. So let me welcome all of the participants from various countries who are joining in, and the speaker, Mr. Sunil. Thank you so much, Dr. Venkatesh, for this initiative. And I hope that these initiatives like this will really strengthen the collaboration between AIT and the banking sector, as well as other enterprises. So thank you once again, and let's have a good discussion. Thank you.
Thank you very much, Dr. Naveed Anwar, for your welcome message to our webinar and the participants. We would like to invite Mr. Sunil KC, the speaker of the webinar today.
May I request all panelists to mute their speakers to avoid any echo. Thank you very much.
Thank you, Dr. Venkatesh, and thank you, Dr. Naveed. Very good afternoon to you all participants, and it's a great honor and pleasure for me to be here today. It's a great platform for me to share some of my thoughts on our journey as a value-based banker in Nepal for the last 5-6 years. Thank you, entire AIT team and Dr. Venkatesh for this opportunity. This is indeed a very great opportunity for us to share or introduce NMB in this platform. Let me start with some figures to set a perspective here. In year 2050, world population is expected to reach 9.7 billion. That means in 30 years' time, we'll have 2 billion more people in the planet. That means in next 10 years, we'll have 700 million people in the earth. And as per the estimate, more than 90% growth in the population will take place in the emerging and developing countries. And at the same time, the growth in the middle class will continue, and that is expected to change the consumption pattern significantly over the next 3 decades, 30 years. So that means that would require additional energy, food, space, and water, all these resources to cater to accommodate those increase in the population, or rapid increase in the population over the next 3 decades. We are going to face a major challenge in terms of managing environmental issues, climate change issues, migrant workers issues, food security, so on and so forth, going forward. So are we ready for that? Maybe we need more than double of the space which we are using to accommodate, to cater those requirements. So I think this time has come for us all to think about redefining the banking to cope up with the changes, the challenges which I mentioned earlier, and the future which we are seeing over the very short period of time. So that's the reason, I mean, we have been focusing on this sustainable business model, and we are talking about serving people and planet through banking. So this is all about value-based banking, and that's what we have been doing it over the last few years in Nepal, and this movement has been there for quite some time now. So now we'll come to the topics like what value-based banking is all about. As I said earlier, to serve people and planet where we are living through banking, and that's the basic principle of values-based banking. And there are 6 basic principles of values-based banking principles. The first one is a triple bottom line approach. That means we put whatever products or services we design, we meet the need of the people and safeguard the environment. When you think about any products or any services which we provide to our customers, clients, we think about their needs. At the same time, is it impacting the environment, or is it impact positively the society or not? That's the thing we could talk about, not only the profit. So that's how it differentiates, and that's what is the basic principle of doing the triple bottom line approach while doing the banking practices. So this is what differentiates us from the mainstream banking, which is mainly focused on basically on a profit or bottom line. That comes as the first. But for us in the values-based banking, does this whether this proposals or any products basically complies with that or not? First test is whether this will have positive impact or not. If yes, then it qualifies for that. If there's any negative impact also, is there any mitigation available for that or not? That's the question. If no, then that's not the triple bottom line approach. If yes, then yes, that's a triple line bottom approach. I can say very few examples from our country itself. As you know, Nepal is one of the countries where we are very rich in hydropower or this water resources. But still, we are more than 20% of our population, they don't have access to electricity. So when we do products, when you come up with our products or build a portfolio, we are doing renewable energy products like solars in the very remote area. And that means when they are out of grid and they don't have even access to this electricity, when we finance those kind of projects, what happens is their livelihood will improve and they can start their own entrepreneurship with the small loan which we have given with the setup of that kind of solar project. And they can start their own business and that will impact the entire community over there. So that's the example of how we are approaching our clients through this triple bottom line approach. And next principle is we have to finance on real economy, and whatever we do, majority of our finance goes to the productive sector. Productive sector means agriculture, energy, as I said earlier, sectors where we can replace the exports, education, all these sectors that provides real input for the overall economic growth of the country, and that helps address the key issues related to the community and improve the livelihood, decrease the poverty line. So this is the second principle we follow in the values-based banking. And transparency obviously is one of the major factors. Transparency and inclusiveness is one of the major area we look into it. And as a values-based banker, we always want to be in as a leader. We want to lead the market with in a transparent way and lead the industry with the example. So we've been doing many projects which helps the real economy, and we are disclosing, or we're doing inclusiveness and through transparency, and we want to be an organization where everyone understands us, what we are doing is clear to them, so they understand that what the impact this industry or this unity bank is creating. And the other is long-term resiliency, and where we want to self-sustaining organization with long-term outlook. It's not we don't want to be involved in a short-term trade and book profit and get out of that. It's not the kind of thing. The projects we are investing, the projects where we are doing, and the operating models we are doing is with a long-term perspective. And we also believe in long-term deepening client relationship, long-term relationship with the client, understand their business, support them, and create a win-win for the entire ecosystem. When we are doing financing the, let's say, tourism sector in Nepal, we are supporting the SMEs, micro SMEs down the line in the supply chain. they are also getting. So overall, it's helping us to grow the economy and supporting them. And we are more focused on client relationships. And with all these principles embedded in our culture, how we do the business, what we leave that in our values, we leave that in our life. And the most of the decision which we take through that, based on that principle, is sixth principle, which is the culture of the values-based banking. So basically, these are the key principles of values-based banking, which differentiate us from, or this values-based banking from the other mainstream banking. And that's where we are contributing, especially in the context of countries, smaller countries like Nepal. This is very relevant, and we are really contributing for the overall, good for the overall economy, and cope up with the challenges we are facing and support the people which are below the poverty line and which are trying to grow, and providing the access to finance and providing the access to other basic needs of energy, access to education. All these are the basic focus we've been doing as a values-based banker. So next slide, please. So as I said earlier, we focus on our majority of our resources. We try to provide for the lending portfolio, not in other speculative investments and others. So by doing that, what we are creating new SMEs, we are supporting micro SMEs, microfinance, smaller loans. We are supporting returnee migrants, where they are, when they are coming back from after having worked in the different countries, the migrant population. So these are the focus area where we are trying to create positive change in the local banking system. At the same time, we are working for the better world. As I mentioned in the earlier, that there are a lot of challenges we're going to face in next 20, 30 years in our lifetime. And if we have to address those things, then we have to prepare ourselves to work for the better world and contributing from our side. There are more than 25,000 banks in the world. And if we're managing trillions of assets with us, and if we can contribute to some extent while doing our business, not only as a corporate social responsibility, but while doing our business, if we embed that in our culture, then we can bring that positive change. So we're trying to do that positive economic, social, and environmental impact when doing financing the hydropower projects. We are trying to generate clean energy that will replace the fossil fuel and the huge deficit which we are facing in trade deficit by importing these fossil fuels, petrol, and all these things. So whatever we do and whatever we are lending, whatever supporting our customer products, services, are helping to bring positive economic, social, and environmental impact. And we always focus on what the requirement of the human needs. As I said in one of the examples, that when we provide that social electricity or energy through in the rural areas through solar energy, they can start their own small business, like starting a computer institute or starting any cyber cafe, whereby they are providing awareness to and other opportunities of business at that community level, and that is helping to prosper the entire community. So we look our investment, our lending from that perspective, and we focus on those areas. So as I said earlier, again, the focus is basically on real needs of the real economy, not on the other financial economy. So being that, we are creating positive impacts all over, and that's building a overall ecosystem where everyone is benefiting out of our act. So that's what is the responsible banking for us. That's what we've been doing. Next slide, please. So this is a simple example of, like, we're saying that what are the, in our view, what are the real activities or real economic activities, like that's in the first and second row, and in third and fourth row, those are the financial economy, which is not under on our priority. Though we're doing few of them, but our priorities in the first two rows, where we There's a few examples: organic farming, energy efficient office building, energy efficient projects, housing for seniors, clothing manufacture. These are just an example set up in the global level. But the core activities which suppose the real growth of the economy and support the real requirement of the country. And for example, here, like whatever deposit we collect today from anyone, they should know that, and they should know that where that deposit going, where we are investing that deposits, what impact that deposit is creating. Every $100 of deposit which you take from any individuals or any business, when it comes to us, we make sure that that is invested. If we invest that into the, let's say, hydropower project, then that will definitely help. Ultimately, that'll come back to them as a benefit in terms of community support, and at the same time, that earns the interest for them. So what we are, this model, what we are trying to do is we are focusing on those areas, and we are very, cautiously, we are just looking at the opportunities to support those kind of long-term infra-related projects, for example, tourism-related projects, education-related projects, so that creates a lot of opportunity of employment in the community, in the country, and that ultimately helps the overall community as a whole, and that's preparing for the future generation and the future problem which we foresee in near future, as I mentioned earlier. So this is the model we are using it, and we are trying to create awareness for that, and we are trying to ensure that this is done very strictly. So next slide. So as I mentioned, we'll put resources to be better common good with which as vehicle. Entire community is taken into consideration, and our client talk about us. If I can convince a client that his money being put in the bank or his money being deposited in the bank can create a lot of impact, and that will ultimately help his next generation, then definitely they'll come to us. That community is gradually growing, and we are getting support from that, and ultimately that will make banking totally a different ballgame than what we've been doing earlier. The next slide, please. So now I'll talk about, briefly touch upon the alliance which we formed in year 2009, and we joined this in year 2014 from Nepal, and we're the first bank in Nepal to join this global alliance for banking on values. That was in 2009 when that time we had this subprime crisis. This global financial crisis occurred in the most developed markets, and immediately after that, few banks, including Triodos Bank in Netherlands, BRAC Bank in Bangladesh, and few other founder banks, they realized that we need a different community or alliance where banking is to be done not only for the speculative purpose, but that can create a really impact, that can create really positive impact in the society and the entire industry. And out of this, more than 25,000 banks in the world now, this is a small alliance with 62 financial institutions, and there are different partners also like DFIs and others. And this is spread all over the globe, including Asia, Australia, Latin America, Europe, Asia also, US. And we are currently managing through these alliance members, more than 70 million customers are there, and we are managing more than $200 billion combined assets among these 62 banks and credit unions, microfinance companies. And currently we have at present about 77,000 staff. We are working all over the world with a common goal of this and common principle of values-based banking. And the mission of this is to use finance to deliver sustainable economic, social, and environmental development with a focus on helping individuals fulfill their potentials to build stronger communities. So this is basically a CEO's network where every year we meet and share our best practices, share our thoughts, and always try to bring in positive change in the society where we work. Discuss about the migrant workers problem, discuss about the melting climate change issues, discuss about the different issues, social issues also, so that we can support them through our banking and support them through providing financial support, and what financial investment that goes that can create those changes. I talked about in Nepalese context, supporting the migrant workers coming back even during these days, post-COVID, during this COVID-19. There are many migrant workers are coming back from different destinations to Gulf and Malaysia and other countries. And we have come up with a product, and we have launched a scheme that will support them to start their own business, or support them to create other opportunities for jobs and all these with their experience at the lower rate, subsidized rate, and the government is also supporting on that. That's what we have been doing it, and this is what is the whole purpose of this Global Alliance for Banking on Values, GAVV, which is very active now, and now the number of members are increasing every year, and every year we have an annual meeting of the CEOs, and we have a different leadership team and HR to create an impact within our organization, and try to create with that impact we can create a change, in positive change in the overall society and community where we operate. The next slide, please. So this is how we operate, like we would lead the thing, exchange the views, create a network, innovate the different products, innovate, provide the solution to the issues or social issues or any other issues related to this change, and advocate that. This is what is all GAVV, or Global Alliance for Banking on Values, is all about. And we want to create a fairer financial system. We want to create a system where everyone can benefit out of that, and not only focusing on bottom line or profit only. So next slide, please. So in 2017, Nepal had opportunity to host the this annual event of Global Alliance for Banking on Values. That time we placed different commitments were made by all the members then, and after that, 3 other meetings have already been taken place in Vancouver, Peru, and last year it was in the Bern, Switzerland. And every year when we conclude that meeting, we make a place among ourselves and come back to create use that in the back in the work on our day-to-day banking, and create new innovation and products or anything, so that we can deliver the change in the society. So basically, these are the points we have placed during that conference which we had. We hosted back in 2017 in Nepal, and that has really created a very good awareness in Nepal for values-based banking, and even Prime Minister inaugurated the event, and a lot of support from the regulators and other stakeholders were there. And we expect this can further, improve and the financial system within the country, and ultimately help our society and community. Next slide, please. So this is also about the same places which we did back in 2000. This is all about bringing in positive change in the society, creating employment, supporting the environment, and working on the climate change initiatives and mitigation, or supporting our using our finance to achieve all these goals, and whole focus on all these things. So next slide, please. So now this is how this values-based banking are different from mainstream banking. This is the table is there. What is clearly show that among the values-based banking, this is a research done by one of the international company and independently done by one of the international company at the request of GAVV. And if you look at the asset to total loan to total assets, which provided by the banks, in the case of values-based banking, bankers, it's almost around 75% or more than 70% for the last, in the year 2018, 74%, back in 2008, 70%. But if you look at these GSIBs, they are global systemically important banks, the mainstream banks. Their loan to total asset ratio is just around below 40% over the last 10 years. What does that mean? I mean, that means the values-based banking are deploying assets for the lending, means they are supporting the new ventures, entrepreneurship, enterprises, creating positive impact in the society. What lending means, when we're doing that, you are creating a new hydro projects, new solar projects, new renewable energy projects, new hotels. So these are creating all the positive impact in society. And that quantum is more than those mainstream banks. So this is one of the differentiator, and this is how we believe we are creating more values or more supporting more to the community as a whole where we are operating as a bank. Next slide, please. So if you look at the same in the case of deposits to SL assets, again, for VB's bank, values-based banking banks, this percentage is again higher side compared to total assets. That means we are mobilizing the individual deposits, individual enterprise deposits for the positive lending, and that is creating win-win situation and creating support the overall ecosystem. Whereas the mainstream banking, their remaining investments are in the more speculative assets, derivatives, and all these kind of product services, where this is more on a gaining financial gain, more focused on trading profitability, but less impact on the community or society and environment. So that's how we differentiate. Even the research, this is also research done by independent agency that shows that way they are values-based bankers are contributing more in terms of providing this kind of support to the community and living the values or principles which I discussed at the beginning of the presentation. Next slide, please. Again, equity to total asset is on a higher side, though it's more or less, and there's not much of difference like in other case. If you look at the last 10 years figure, strong equity, that means more commitment, more fund you are putting in, less leveraging, and that's the difference again between GSIBs and PBBs. Next slide. If you look at the last 10 years return on assets for GSIBs and PBBs, if you look at for the principle I was discussing earlier in the resiliency, in 2008, if you look at for GSIBs, the ROA has gone down sharply during that crisis, global financial crisis. But for PBBs, if you look at the COB is more or less flat and at the same level. But for there's more, erratic trend for this more directly linked with the market for GSIBs, obviously. And at the same time, earnings is also different. That average return on asset is better for PBBs in both the 5 years and 10 years time period. So that shows this values-based banking is proving to be the right model for banking to support, and the people are also supporting, and that's creating a lot of traction, a lot of support from the overall communities as well, and that's creating a lot of positive changes in the society or community. So next slide, please. Again, ROA is also, it's a similar case, slightly on the better side. So So they are we are in a better position in terms of less benefit from higher leverage in delivering ROEs compared with the GSIBs. So this is again taken from the historical data done by the independent agency. So these are the examples. These are some numbers which differentiates or which shows that how values-based banking is doing or performing over the last 10 years after its establishment. The next slide, please. So how we manage this COVID, which is very unfortunate situation and very, very, I mean, we never faced that in our lifetime, and it's one of the major crises which we have faced during, at least for my banking career. But if you look at what common we have when we were discussing during this lockdown or COVID period, what we have seen is in most of the cases, deposits of our banks, this values-based bank, have increased despite all these pandemic effects and all this. We try to provide services to cover from the branches itself through our digital channels. During the lockdown period, when there's a strict condition not to, lockdown was strictly being implemented in most of the countries. Still, we, as an essential service provider, we provided services to our customers. What we have realized is we really seen positive impact during that period. It's not only the example of Nepal, but if we see, we discussed this in our different Asia forum, and even in Bangladesh, similar kind of situation was there. I'm not sure about Sri Lanka, but in the other countries also, that is a common kind of thing. So basically, we really been focusing on how to support our clients because of this economic shock created by this uncertain situation. We are providing with them with the top-up facilities, or we are supporting them for revival from this crisis. So basically, all over the among the values-based bankers, we are maintaining strong capital position with differences to support this type of, to cope up with the shocks which you see during this kind of a situation. So even during this very unfortunate and very difficult time like this, we've been able to cater or support our customers to direct, to be in touch with them, being surveys and trying to support them. And we'll try to take them out of this crisis when this will be over, hopefully very soon. So this is what is all about the partnership kind of banking, or responsible banking, we call it. And this is all based on the values-based banking principle, which we've discussed earlier. Next slide, please. So this is about all values-based banking. And for the benefit of those who don't know about Nepal, I just want to share, quickly go through the slides. Like this is the slide shows the last 50 years GDP growth for Nepal. The blue line is for the global all, but for Nepal, it's the upper one, the other gray lines you can see over there. If you look at this thing, over the last 50 years, Nepal's growth has remained very, there are certain erratic trends, there are certain times it goes up with some events and again falls down. But if you look at the average growth for the last 20 years, it's not even 4%. In that, during that time, other Asian countries have grown really well, especially in South Asia. The growth was very high. So we're facing a lot of problems during civil war. So we had a major earthquake in the year 2015, and that after that we had a blockade from in our southern border from India, blocked everything. Since we don't have any direct port access. So during those periods, if you see the this really dipped growth, and after that we promulgated this new constitution of the country. Country moved into the federal structure, and we saw stable government for the last 2-3 years. And that time the graph for the overall growth have been growing in the stable and higher rates, above around 6 to 7%, but because of COVID now, again, it's come down. It's very unfortunate for us. If you look at the last 5 years timeline, we've faced a lot of this kind of problems, starting from the earthquake to now COVID. This is a global kind of phenomenon, but that time it was for Nepal. So we've not been, but still, even during time, the banking industry in Nepal, and we are being our better performance, and that is primarily, again, what I believe is basically most of the our generally banking practice is more or less aligned with this values-based banking. We are more focusing on creating assets or creating supporting the business enterprises to support the SMEs, micro SMEs. That's what is the trend. And if this represents whatever overall situation for Nepal. So next slide, please. So banking in Nepal has a very brief history. If you look at the real, in sense, the first private sector bank came in Nepal in 1984, and during 1984-85, the then ANZ Greenlays came to Nepal. Crédit Agricole from France, they operated as a subsidy company in Nepal, and other bank, Naveed, which is also a joint venture with one of the Arabian bank. And now it's 35, 36 years. We are overcrowded now with more than 27 E-class commercial banks and 162 total financial institutions. For the GDP size of US dollar 34 billion is a high number. Currently, we are managing about 27 billion. This is for commercial banks of assets. Deposits size is about 31 billion. This is again the example which I said earlier. Most of the deposits are being invested in the customer credit facilities or customer loans. And we currently have more than around 10,000 footprints all over Nepal for the banking industry now. So kind of situation where compared with the size of the economy, number is on a higher side, and we expect now consolidation going forward, and this number may will decrease. Earlier, this number was again very high. Now, in the last 2-3 years, the Central Bank of Nepal is supporting, asking banks for consolidation, and this drive will continue, and we'll see lesser number of banks going forward, and higher focus on, again, the values-based kind of banking going forward. Next slide, please. So this is based on our mission, vision, and values. We are trying to align with that. As for a commercial bank, we are trying to be more responsible bank and client-centric bank. This is what embedded in, as I said earlier, those principles, those focus as a GABB member or as a values-based banking member. We are trying to reflect that in our vision, mission, and values, which we live every day. So next slide, please. So this is some highlights of key achievements for NMB. We started in 1996 as a very small C-grade bank, and 2008 we upgraded as a A-class bank. We're the first bank to get that kind of a double kind of upgradation from the central bank. And then we established our investment banking unit, and we established our Malaysia office in 2014. And then in 2015, we successfully acquired 4 banks from different regions, especially to focus on SME, micro SMEs space, retail space. And after that, we've been continuous. And since then, in fact, 2015, we have started this journey of values-based banking in Nepal. And after that, we've been recognized internationally also with the bank to get a back-to-back Bank of the Year award by the Financial Times London in the year 2017 and 18. And again, 2019, we acquired one more regional development bank to focus on our key focus areas of agriculture, energy, infra, SMEs, micro SMEs. And now again, this year we are acquiring one more bank, regional development bank, which is, this is basically to increase inclusiveness, as we discussed earlier, that focus on to provide the financial services to all over the world. In Nepal, still more than 40% population out of 30 million population, they don't have access to finance. They are relying on informal channels, economy or informal channels for doing their day-to-day activities. So that's what we are doing over the last 5 years, consistently expanding our activities, acquiring banks in the different rural areas, and increasing our footprints and reach out to those areas where they really need the financing, where they really need the support and to further support the overall real economy of the country. So this is what we've done, and this is the map. You can see that we are all across the country. We have created a branch from east to west, south to north. North is the mountain area at the top. South is the border. All of the three sides are the border to India, and we are expanding our activities all over the world, all over the country, except for one state, which is state 6. There are not much of opportunity as of now, but we'll also go try, and from in future we try to expand our activities. And this is about us. And with this basically values-based banking, we are first in various areas of business. We're the first bank of Nepal to become global member of Global Alliance for Banking on Values. We are the first bank to bring in foreign funds from the old bank to support SME micro energy sector. We're the first bank to get the award consecutive years. We are first bank to close largest syndication deal. So we are focusing on smaller $1,000 loan to 50 million, 60, $70 million loans. This is syndication done for one of the cement factory, which is we consider as a productive sector here. And we are the first bank to get the repeat mandate for getting the loan from IFC to support real renewable energy and SME micro segment. We are the first bank to get ISO certification for information security when there's a big issue on this cyber security issues and cyber attacks and all these. So these are some achievements, and that's truly what we're trying to say here is we're truly living the values of values-based banking, and as the first bank in Nepal to do that. So next slide, please. So as a value-based bank, what are we doing? I mean, we are the first bank to initiate for this environmental and social risk management. We are working with central bank and our joint venture partner FMO to, we are going to be the first bank to implement this environmental and social risk policies in Nepal to implement the practice. And we are the bank to do the partnership of carbon accounting financial, and we represent Nepal from in that global body. So we have the highest market share in renewable energy. We have the highest market share in subsidy loans, which is provided for the migrant workers, women, without any collaterals or any securities. We have doing largest number of hydropower projects. We currently have in our portfolio more than 42, 43 hydropower projects generating 500 megawatt, 550 megawatt of projects. That's with obviously partnership with other banks also. But we are involved in the largest number of hydropower projects, which is generally considered as a risky projects, long-term projects. It's done in the very difficult territories, and it's totally a lot of risk related to geology, a lot of risk related to natural calamities. During that earthquake time, more than 10 projects were damaged, and project where production was, disturbed during that period of time, stopped that during that time. So we have just recently launched the product Green FD, where for every account every money we receive from that account, we invest in the sustainable, productive sector projects, and we plant a tree for that in the name of that depositors. And we are using the fund from the different DFIs or international agency. We are among one of the very sought after names among the international DFIs, international lenders. And we are using those funds in the SMEs and real economic activities. And we are doing different projects with marginalized women and other segments where the access to finance is a problem. And we're trying to work on with them on the capacity building, providing credit facilities. We are working with support from the FMO and other donors also. And we have a very sizable portfolio of smaller loans below $100,000, a smaller loan. And we are supporting we have a 35,000 customer base, and 16% of more than 16% of our total portfolios, those smaller loans below 100,000. And we are also involved in various capacity building projects for those projects and those smaller businesses to support them and to create a ecosystem where we can finance and create some positive impact, and we find the risk mitigants within the system by supporting them through different activities. So next slide, please. So our focus, as I said earlier, is as energy, agriculture, tourism, health and education, and export related and import substitute sectors, and infrastructure and construction sectors. These are all our majority of our portfolio under these categories. And among these, energy is we are leading the market. Agriculture, we have started recently, but we are going very strongly because this is very important for countries like Nepal, where we want to be self-reliant, where we import every dollar export, we are importing 14 times $14 of imports. Huge trade deficit for the country. That's the major challenges. Major foreign currency source comes from the migrant workers working in the different countries, and about 30% of our GDP that comprises about if you look at the numbers, that's about 30% of our GDP. So because of those macro related issues, that we need to focus on industries or businesses or sectors which can help us to become more self-sustainable and self-reliant and not depend on other economies. So that's what we are trying, and these are the focus area. And this is totally different business focus sectors than other banks, mainstream banks, because others are really low-hanging fruits, but these are the issues, risks are involved. All these, for example, energy, our minimum tenure for the term facility we provide is 15 to 20 years. And it's a risky project, as I said earlier. So, but we are investing because if we become more, we have a tremendous capacity within the country. Like next 5 years to 10 years, we are trying to generate 15,000 megawatt of electricity within the country. That will not only support Nepal, but we can support other neighboring countries, Bangladesh, India, through this clean energy. So we are investing that. That will ultimately help Nepal to become industrialized country. The cost of production will go down, and that will help Nepal to bring in more FDIs into the country, which is the need of for the countries like Nepal, where per capita income of people is not around $1,000, only low below what the average is. So this is what we are focusing as a bank, as a values-based banking, and this is what is our model. And at the same time, we are doing, in terms of return also, we are doing better than majority of our competitors. So this is our business focus, and this is my last slide before I conclude. We are using this HEART model in our business. H represents hydropower, A export-oriented business, A agriculture, and R renewable energy and tourism. This is at our heart, and this is the business model we are using, and this is what differentiates us from other mainstream banks in the country. But this is a long journey. There's different challenges we are facing. and we need support from all, and we're trying to create awareness, and this is what we've been doing to support, to even in this very small contribution to even for the better world for tomorrow, and overall positive impact in the overall global economy at a very small level. This is just the initiative taken by NMB. With this, I'd like to take pause here, and I'll take question and answer if there's any. Thank you very much.
Thank you very much, Mr. Sunil. That was a very, very interesting and enlightening presentation. Now, one of our students, master's students, Mr. Ghulam Sarovar from Bangladesh, he has a question. I think many others may have a similar question. What stops other banks from taking the same value-based banking approach? In Ghulam's word, should every bank be a value-based bank? How would you see that question, Mr. Sunil?
Well, yes, that's what we need. As I said earlier in the beginning of my presentation, now we have to redefine banking for a radically different future, because what we are living at present is not going to be there in near future. So for that change, to cope up with that change and to adapt to that, we need to think in that line. But probably the difference is, like some of the banks, they want quick return, and they focus on more on a short-term return, where generally the returns are better when you're doing business, and you can churn out your assets or churn out your investment very quickly and get the higher return. But this approach, what we principle-based, values-based, principle-based banking, it is a long-term game, and it takes longer time. And if you look at this case, there are the projects are risky also. Like many of focusing on small micro SMEs at this point in time, at this current COVID situation. And they are most highly impacted. If you're focusing on just trading business or you're financing traders, that's more safer, and return is higher, because that's just supporting them through a kind of import trade or supporting them in a short term. But these are the game for the long term, and that's why probably it will take some time. But the banks are now showing interest, especially in Nepal, even in Bangladesh. I think the bank is leading this alliance, and they are really doing well, and they are really doing in terms of business. And that kind of example can bring in other new bankers to come in, and the consolidation which we are talking about is ultimately force the banks to take this kind of model. And we'll see more and more such banks in the world going forward. The number is increasing. The customers are supporting this overall event, and we hope that this will be the future of banking going forward. I hope I answered your question. You're not audible, Dr. Bank. I think you have to unmute yourself.
In a sense, it means that the short-term returns on value-based banking may be lower than in traditional banks, but in the long term, the ROA and ROE are higher than for traditional banks. Would that be a correct summarization?
Yes, I think so. But the numbers also show that whatever I saw earlier, the different numbers for these 10 years also substantiate that or validates that.
Now, there are some more questions coming. In the meantime, we have a distinguished panel here today. We are also now joined by Dr. Wijewadena, who is the former Deputy Governor of the Central Bank of Sri Lanka, and Mr. Karunatilake, who is the Director General of the Institute of Bankers of Sri Lanka. So may I now invite the panelists to pose their questions directly to Mr. Sunil while we are waiting for the attendees to put in their questions on the question and answer box. So, Dr. Wijewadena, Mr. Fernando.
Thanks, Dr. Venkatesh, and I'd like to thank Mr. Sunil for the enlightening presentation on the values-based banking system, which is actually a novelty for Sri Lanka because we have never ever heard this kind of banking system in Sri Lanka. And specifically after the COVID-19 pandemic, our banks were still concentrating on collateral-based lending rather than the values-based lending. Now, I'd like to ask Mr. Sunil to explain to us how has this values-based banking alliance resolved this particular issue? When a bank wants to lend only for collateral and not for the values that it would create for society, how has the system has resolved this particular issue? Because it will be a learning experience for Sri Lankan banks.
Well, the situation is not so different, more or less similar in Nepal as well, in terms of lending, and most of the lendings are collateralized, collateral-based lending, and banks are not willing to take risk, especially for the small borrowers where they feel, risk is high and default risk is high. So that's obvious for any banks because when being values-based banking practitioner, we also need the profit. Without profit, we can't sustain, and that is very important aspect for any banks operating in. But gradually, this change has to come, and especially among these GAVB members, most of them are majority of banks are non-mainstream bankers, and they are focusing on microfinance, and they are doing different models, and in the long run, as I said earlier, if you look things from the shorter term perspective, then probably this is a value destroyer, and sometimes you can have a higher NPAs, and these are the issues. But in Nepal now, with the government and the central bank is also supporting, and we are in dialogue with them, we're talking with them. Part of that they are supporting as a subsidy loan, providing certain guarantee-backed loan at least at the 75% of your exposures backed by the guarantee of the government, and part of the interest is subsidized by them, so that they can get in the at least 500 basis point lower rate than what commercial lending rates are. So all these activities are doing, and we are continuously, lobbying with the government also to come up with this kind of things. And now there are different schemes run by the central bank and the government, and we are supporting them. And this is very important for us because this is more of a cash flow lending than what you call it, collateralized lending. Because if you see the projects are fine, and if the woman and they are doing business seriously, and if you have a system in place, and if you can digitize that, and if you have a good access to them through your branches and other agencies, then it's always easy to monitor. It's not only the collateral, but collateral is just a mitigation for that, whatever risk is there. But if you see the things from, if you can really trap the cash flow, we can really train them, build the capacity building for them to be ready for to do the business, then it becomes a bankable kind of risk. So based on that, we have been doing it. We are seeing the portfolio. But if you look at the other experience of other markets, I think they are doing well in terms of their portfolio based on if it's the last 10 years. For Nepal, we are relatively new in this. So we had to see the different results and the NPA level, everything. But so far, we see this as a right model for us. If you create a good mix in your balance sheet, and if you can offset some of the risk through other assets, which is more secured, or you have to do some balancing game there. So I think we have to take a step-by-step approach for this, and gradually build that confidence, awareness, and make ready through capacity building and other supports for them. I think. I hope I answered your question.
I think, Thank you very much, Mr. Sunil. And it's good news that your banks have started this cash flow based lending to customers. Now, I can share some of the experiences that we have in Sri Lanka in this immediately after this COVID-19 pandemic. Our banks had been concentrating mainly on the corporate sector and the medium and small and medium enterprises, but to the exclusion of the micro and what is now known as the meso sector. Meso sector is the sector in between micro and MSCs, and that these two sectors have not been actually funded by the banks, and as a result, this cash flow based lending has been practiced not by the formal bankers but this informal money lenders, because I have gathered a large number of cases in Sri Lanka where the informal money lenders have just watched the cash flow of these particular entrepreneurs by doing not the formal analysis of credit analysis, but what is known as this eyeball test. You just look at the person, how he is performing, and then you make the judgment as to how he might be a success or a failure. And these people have been lending to these micro and meso borrowers, and as a result, they are actually filling up a gap in our financial system. So I note Mr. Nanda Fernando of the Managing Director of Sampath Bank is here. Now, this is a good lesson for Sri Lankan bankers, because this particular sector, which is not being serviced by the formal banks, which are presently lending only based on the collateral and the credit worthiness of the customer, we'll have to look at how these informal money lenders have been assessing the credit worthiness of their prospective borrowers and advancing money, and at the same time they are recovering the money that they have lent also. So I would like to know from Mr. Sunil the experience in Nepal. What is the position of the informal money market when it comes to lending to micro and what is now known as these meso borrowers?
Definitely in Nepal also the informal market exists. The lenders at the village level, a lender at that level, and because of their processing time and because of all these hassles, they generally prefer to go there. But in last few years in Nepal, what happens is the central bank has asked all the banks to go in all. We have around 754 villages at this local level governments, and each area the commercial banks has now presence. And at the NMB, we are also expanding. We have about by next 3 months we'll have about 200 branches, and we do have our microfinance subsidiary company. They are operating in microfinance space. They also have 100 branches. But that exists. But gradually now, with the effort from both from the government side and even for private banking, and this is kind of mandatory requirement of doing business in those areas. Gradually and establishment of cooperatives. Regulated by the central bank. Gradually, that is, shift is towards this, more towards the formal and very strict this AML policies and practices which introduced by the central bank is also discouraging that. But still, having said that, this informal sector exists, and that is also in a significant manner. And especially in the rural areas, that is very, until and unless we go there, because still there's, as I said earlier, 40% of population out of this 30 million population, they don't have direct access to formal market. That's a big chunk. But next few years time, and that's what we are trying to work on, that we see the opportunity there, because their interest rates, they are charging at 25, 30, 36%. And here, the banks are charging the maximum now. As per the new directive, we can charge more, maximum up to 15%, and banks like us, we're lending at 10, 11%. So there's a lot of difference in the cost of borrowing there, and because of that we can bring in them, and we are working with partnering with some of the other bilateral agencies who are providing us guarantee fund, and all these different models are also being used to go into that kind of segment. We are doing very small micro hydro, small projects of 50,000, not even less than 50,000 kind of loans in those areas. And we are trying to different models to increase our risk appetite and mitigate whatever is there. And gradually, it will take time, but gradually that this will be addressed, I hope so.
We have a very interesting question from Dr. Mamoon. He's an AIT alumnus now with the credit rating agency in Bangladesh. So he would like to understand whether the risk management framework for value-based banks is different from the regular banks. I mean, I think the question probably comes also from the loans to total assets. You know, it is more than 70%. So are the regulations of the central bank somewhat different for value-based banks?
In Nepal, no. Answer is because we have it's the same. In our case, the maximum loan to deposit risk CCD ratio is 80%. Now it's 85%. Recently revised to support COVID impact. So that's same for all the banks. There's no difference, and they don't recognize NMB or any other bank. There's one more development bank as a member of the GAVB now recently joined. They don't differentiate, but within that assets which we have created out of deposits, the percentage of, because there's a mandatory requirement now to go for Nepal is gradually, as a central bank is trying to bring, put every banks into this values-based banking model. Now, as per new directive, we have to put, invest about 40% of our assets in the this productive sector, which is primarily invested in the real economy, which I explained earlier. So that means there's the same one regulation for all, but it's up to the bank to decide, like if you go beyond that 40%, that's our call. And but you have to manage at least that kind of percentage, and whatever rules apply, that is there. So basically, Nepal is a small kind of market. Industry, banking industry is not big, as I said earlier. The assets which we are managing is below $30 billion, which is very small compared to even Sri Lanka and Bangladesh and other South Asian countries, and not exposed to other financial markets. Stock market is closed, no one can invest here. It's sort of insulated market, and we have no choice because we have a lot to be done in terms of graduating our country for middle income country and achieving the goals of SDG goals by 2030. So somehow the regulators and the banks are also gradually moving in that direction to support overall, the drive which the government is taking at this point in time.
So before I get back to the Q&A, my colleague from the School of Management, Dr. Lakisha, has a question. So I'm going to invite Dr. Lakisha to pose the question directly to you. Lakisha, over to you, please. Hello? Dr. Lakisha? All right. I think she may have lost the connection now. One of our students has this question now. In the post-COVID era, we seem to, there seems to be a rush to lend and lower the rates. The question is it increasing the risk to the overall system, including the value-based banking?
The question is like risk has increased or not?
Has the risk increased because banks seem to be scrambling to lend, and in the process, reducing the rates and processing it faster. So I think this is based on his knowledge of the banking sector there.
Okay.
Is that how it is happening now? Is there a kind of search for credit?
Situation is like now, because of during this COVID situation, what the central bank is doing is to create a extra liquidity through different market operation, coming up with some instrument through refinancing and all this. And they have recently increased that ratio of the credit to deposit ratio by 5 percentage point. That means that will create a huge chunk of lendable, around 100 billion, more than around that level of lendable fund into the system. And this is a small market, and probably now what the banks are doing is to get advantage of that extra fund or liquidity which is provided within the system because of changes in the relaxation in some of the regulatory ratios and some of these ratio. They are trying to book the assets in that case. Overall risk has definitely increased because Nepal is totally dependent on tourism, remittances, and a little bit on export related activities to support its foreign currency reserve within the country. And all these areas are hardly hit because of remittances, for obvious reason that people are returning back to the country, and most of them have been laid off, lost a job in the destination countries because they are in Gulf countries, Malaysia, Korea, and they are also struggling at their economic activities. And so we'll receive lesser number of remittances going forward. And at the same time, this tourism, hotel industry, they have because there's no international, this border are still seized, lockdown is over now. So overall risk has gone up, and in that supply chains, all these SMEs migration have impacted. Yes, if you look at the risk level, that has gone up. But now what our banks are doing is to try to book good loans at a cheaper rate, and the drive from the central bank is also to reduce the rate than what we used to charge the customer earlier because of to support this the industry and businesses which have been suffered by the thing. But I personally think that this is going to be short-term kind of phenomenon because, as I said, there's an impact at the source. We expect that remittance will go down, export will go down, and if we can't manage import at a certain level, then that will increase our negative balance of payment over the period of time, and that will also hit the liquidity into the country. But at the first short period of time, there are certain competitions are trying to book the thing, but that will further increase the rates, increase the risk. Sorry.
So in general, I think it's in keeping with the COVID-induced crisis. Risks are going up across. John Gomez has several questions, so I'm going to John. Please join us in asking the question now. Can you hear me? Hello, John Gomez. Hello. John? All right, so we will come back to...
Hello.
Yes.
Can you hear me?
Yes.
Yeah, actually my question was about the COVID. I mean, this teaches us a good lesson that, unprecedented risk is undue. So how best the banking can reshape its crux of the businesses and then to be ready for any contingency that might come up in the next decade or so. So, and then to have certain special purpose vehicles pre-designed, or how the readiness can be there, because it's evident that we need to rethink and then to restart everything. but how can be the readiness speak about the future or the unprecedented risk? Because COVID we might confront a more stringent or rather more severe case than the COVID-19 in terms of health, which affect the society, but it affects the business as well. So to be ready with all these contingencies, how best we can be starting, or which will be the starting point? That's my actual question.
Excellent. Mr. Sunil, to you then.
Yes, very difficult question. I think we need to, one of the principles I mentioned earlier as a values-based banker, to have resilience and create a business model with long-term operating perspective and with a long-term operating model where, you can definitely, we will see similar kind of crisis in future also. As I said earlier, in Nepal, we faced this kind of, not of this magnitude, but faced a similar kind of thing in last 5 years as a massive earthquake and all this. So definitely we have to manage the risk and portfolio, to have a balanced kind of portfolio with long-term perspective and adequately capitalize balance sheet so that we can absorb the shock and basically develop a business model where sustainability is one of the basic factors will help, I guess, to cope with this kind of unprecedented crises or challenges. But having said that, it's always, each challenges bring in different risk, at the same time opportunities also, and especially because of this. For banking digitization, especially in this our country or this part of the world, that will increase that awareness and all this. That would, if we have that kind of infrastructure in place, platform in place, then going forward, this disruption which we've seen because of the crisis to some extent can be minimized or managed. But you always have to be ready, and you have to have a diversified kind of risk portfolio, I guess, and different sources, so that if there's something happen because of this kind of situation, we have to manage. And kind of alliance we have formed at the global level to share the best practices and to support each other during this kind of times. Definitely would help, and so we have to develop this kind of model, I guess.
Thank you, Doctor.
We have with us Dr. Rashid Bajwa from Pakistan. Dr. Bajwa?
Yes, thank you very much, Mr. Sunil. A very interesting and a very, excellent presentation. I must congratulate you on your efforts. Seems that the management is right at the top of things. Now, let me give you a little different picture from my country. We have commercial banks, as you know, and then we have another entity called the microfinance banks. This is like the small banks in, I think. Now, in the first quarter of this year, the largest bank, Naveed Bank Limited, posted a 29.9% higher profit.
Oh my God.
At the same time, one of the largest microfinance bank posted a loss of 1.6 billion rupees, which eroded 50% of its equity. So this is how value-based banking and what was told about cash flow lending is resulting. post-COVID. Now, as I understand that you have excellent deep-pocketed investors, like you have, I think IFC is giving you funding, and I don't know, my experience with IFC is that they have, the cost of their capital is almost 5% higher than the market, but it's up to you. But with the FMO and the Malaysian investors and taking over 4 banks very quickly, and now you are saying that you're going to take another bank over, it means that you have got a very aggressive marketing plan, which is that there is a very deep-pocketed backup with you. So you don't, you're not relying much upon your own incomes. I would be very interested to know, for example, that how, if you can separate your balance sheet, one from the commercial banking, and then the value-based banking, which means the SMEs, and which means the microfinance, and the middle part, the missing middle, which I called very small enterprises. Now, all these 3 structures are actually, most of them are cash flow lending. And the reason I'm asking this question is that the central bank has put up a stoppage, and they have asked all the banks to do what they call a restructuring or a rescheduling of all the existing assets for at least 6 months. Now, nobody knows who is going to pay the cost of this, but at the moment, every bank, the balance sheet looks nice because we don't know, it's all an accrual-based, financing at the moment, which we are actually doing. So, and then the other thing is that the central bank is so concerned about the cash flow banking in SMEs that it has announced, the Ministry of Finance has announced a 40% first loss guarantee for SMEs. So the questions are that what do you think about your aggressive approach, and is it sustainable? And the other question is that how is your value-based banking, as I call it value-based banking, I will call it like cash flow banking. How is that portfolio behaving vis-a-vis the other portfolio? And the important question is that you have started lending to these SMEs and these micro enterprises, but what is the result? How have the ones which you have already lended last year, how are they behaving in this COVID situation? Thank you.
Well, thank you, Dr. Bajwa, for your question and interesting remarks. So if you look at the numbers of our third quarter, we follow this July to July kind of fiscal year. So the banks have already published the result only up to the pre-COVID period. And most of the banks have profit has gone down because of initial impact of the COVID that covers only 1 month of that lockdown period in Nepal. So it's not like the commercial banks are doing better than other microfinance or smaller lenders. It's more or less at the same level, but the similar the situation is again similar. Like in our case, the government has not announced any stimulus package for this SMEs, micro SMEs. So they are all relying on banking sector to provide this restructuring, rescheduling kind of facilities, and at the cost of our profit. Basically, they have asked us to reduce the rate, provide discounts, provide rebate for all these impacted, and even generally for all the borrowers in the last quarter. So this is definitely going to impact our profitability. But if you we have to differentiate this in 2 sectors, 2 periods. One is before COVID period. If you ask me, our portfolio on SME, micro SMEs, and smaller loans, they were doing perfectly fine, and NPA level was somewhere around 1% plus. But now, because of this COVID situation, obviously, though if you look at the bigger segments, sectors like hydropower, this not hydropower, tourism, aviation, transport, they are impacted most. But all these other supply chain SMEs, micro SMEs have been impacted, and the major issue there is the cash flow. And they don't have any cash flow, they don't have reserve in their balance sheet because of they are very smaller companies. So because of this reason, post-COVID, we may see the different kind of numbers in terms of NPAs, and we'll have to bear with that for some time. But once this is over, again, we still believe that these are the ones which is, once you diversify your risk at that level, it's always pay off. And if our country was growing at the rate of 7%, at last 3 years before this COVID period, this is will go down to 1.7%. Probably next year also will not be that level. So because of that, that was attractive segment for us. But now this is totally unprecedented kind of situation, crisis we are facing. We have to look into that and put a hold on a new plan for acquiring new branches and opening, try to consolidate at this point in time. And so far, I mean, up to pre-COVID period, we are fine. And now we are doing analysis, and but still at this level also, the NPA level and delinquencies are at the manageable level. But it's obviously different from those banks which are lending to all large corporates, or their case is totally different because they are relying on their other cash flows and group deep pocket in the promoters. That's how it's different. So we are doing balancing about 40% of our, slightly over 40% are in these SMEs, micro SMEs, and those productive segments. That'll have some impact going forward. But in the long run, but you can't see these things in a shorter run period of 1 year's profit or something like that. If you see the things from, again, another 10 years timeline, or that long-term, medium to long-term perspective, I think, again, ultimately, will be better performing because you have a diversified base of customers, diversified sectors, and you're not putting all your eggs in one basket, and so that will help. And now government is also supportive on that, and we have to see this. Now this situation is different, and we have to see through them, support them in survival, revival, and once that happens, then again, we can work with them.
Wonderful. One last question from me, Mr. Sunil, before we wrap up. So the alliance itself, the support is in the form of know-how, or is it also in the form of financing and so on?
Among alliance members?
Yes.
No, basically it's just we don't support anyone financial in terms of financing, supporting in terms of finance. Basically, it's a network. We share our experiences, knowledge, and exchange programs, and develop kind of leadership. They're on the different MITs, and they support us for that. And basically, it's we don't support in terms of finance or in terms of any support TNA and all this, but we can exchange the information. We can share the best practices, migrate the best practices from one country to other, and provide network for other business opportunities whenever it comes. So it's a group of 63 banks, and there are other partners like different funds, and the DFIs are there, including FMO and other CDCs also there. So that way, and that puts you in the international map, so that you can have access to those funds, which is very much important for countries like Nepal. I don't know about other, I think Sri Lanka also there's, I mean, thing, but Paki, you mentioned about the higher cost of that. But in our case, there is a certain cap put by the central bank, so we don't need to pay that at the higher, acquiring cost is not so high here. And that gives us a lot of opportunities to interact with and to get introduced with those kind of, that provides that platform on a yearly basis. So that's how we cooperate with each other and discuss and try to create awareness at the respective level, at the respective countries and area. so that going forward, this will become a bigger movement, and this will change ultimately, bringing some positive change in the world.
So thank you very, very much for a wonderful exposition, and we look forward to having you in AIT physically when travel resumes.
Yeah.
And hopefully you will also be able to attend some of the forthcoming CEO talk series. Dr. Phuong, the next slide, please. So next week we have Mr. Nanda Fernando, the Managing Director of Sampath Bank from Sri Lanka. So we look forward to all attendees in the webinar next week as well. And Mr. Sunil, you are most welcome, and I hope your schedule permits to join us. Sampath Bank, of course, is one of the dynamic mid-tier banks in Sri Lanka, which has done a lot of good work, especially in the area of banking technologies. So I hand over the floor now to Dr. Phuong, who will close the webinar.
Thank you very much, Dr. Venkatesh, and thank you, Mr. Sunil, for joining us today. We are very honored to have you today, and we look forward to seeing you on our next webinar. And thank you, the other distinguished guests, Dr. Wijewadena, Dr. Rashid Bajwa, for joining us today. And thank you, everyone, for joining us today. And this is part of the Professional Master in Banking and Finance. And if you would like to have more information about our program, please email us as bankingandfinance@ait.asia. Thank you very much for joining us today, and have a good evening.